All right, you guys. So, welcome back to the channel. We are live today. Welcome to the Wall Street Vibe, guys, where I'm keeping you guys updated on the market, any market news, economic data, so that way you guys can make smart financial investments. Right now, I'm going to play a clip, which I think at this point in time kind of is the same exact thing. We're going to play a clip from The Big Short. This is exactly when they realized that everything was about to go to shit, okay? And here we go. This is just a small clip.
Once the industry leader, by the way, filed for bankruptcy, the company immediately, good time for my voice to go, fired 3,200 workers. The manufacturing index also fell in the month of March, warning that economic growth could slow. Now, the Institute of Supply Management also reported a rise in prices.
I'm going to call my mom.
The principal source of the slowdown in economic growth that began last spring has been the substantial correction in the housing market.
We've known each other for 7 years.
She's got some lungs on her. I'm impressed.
And so far, we don't see really any significant
Can't help but enjoy it.
There's
no fucking way. There's no fucking way that the big banks are that stupid.
Bye, Kathy.
Oh my God. It is absolutely ridiculous. Well, all right. So I'm going to go ahead and pause it right
Kathy
here.
thinks that it would be a good idea if we sold.
And now I'm going to turn to what the S&P 500 is doing as we speak. This was Monday. This was Tuesday. Nothing on Wednesday. This was yesterday. Now, if you watched my live stream, if you caught my live stream on Wednesday, I literally looked at the chart and I said, we could still pop back up to this 400, but I really like this 393, 391 area. And lo and behold, we popped back up there to that 400 and then flushed all the way down. Right now, so if you don't understand technical analysis on charts, all these boxes, some of these lines are rejection areas. As you can see, those lines have been up there since, if you go watch the last live stream, those lines have stayed there. They haven't changed. The only thing that's changed right here is the candles, the direction at which this stock is moving, right? So the S&P 500, this is the ETF, so the exchange traded fund. The index is just as bad, right? Goodness, this is crazy. And it's sad to say that I'm actually profiting off of this move down, but I mean, hey, that's kind of the way the world works, right? Unfortunately, this is a pretty crazy thing. And so one thing that we're going to talk about, obviously, is I do believe that the market crash is starting. I believe yesterday was this morning likely was the first domino to fall. Okay, so Silicon Valley Bank has actually filed for bankruptcy. And in the scene that I opened up with, that was basically the same exact thing that happened. Banks started to fall. If you guys noticed, in 2008, we had Lehman Brothers, we had Bear Stearns, Wachovia went down. They got bought out by, I think they got bought by Wells Fargo. Bear Stearns, I think they ended up getting bought out by Morgan Stanley. Okay. Lehman Brothers completely crashed, right? Right now we are in a pretty bad situation economically. And, this is crazy. This is absolutely insane. So let me go ahead and show you guys what happened to, let me just show you guys here on the chart. So let me pull this up. And if you don't know what I'm using here, I'm looking at, I'm using TradingView. If you guys would like to sign up for a subscription, it's pretty solid. We can both benefit from it. You get $30 off your subscription just using the link down below. I really appreciate that. It would really support the channel. What I'm going to do now is we're going to pull up SVB. So Oh, well, sorry, my bad. I'm like, wait a minute, like, where are you at? SBV Financial. Is that it? Let's make sure that's it. Silicon Valley Bank. Oh, yeah. Yeah, this is it, right? So we're looking at the daily chart here. Now, each candle represents one day. Here, let me go ahead and pull this up. This candle right here, right, was Monday. The stock was sitting at $283. This morning, as of this morning, it has plummeted all the way down. It was actually at $34. This is a joke. This is an absolute lie, 100%. I was watching CNBC this morning, and they were showing it as at $34. Now, I may be looking at the wrong ticker, but it's the same group, right? So it's still Silicon Valley Bank, and they're trying to raise capital. But when we start to see these financial institutions fall and fail and have to file for bankruptcy, it's just an overall bad thing for the it's an overall bad situation for the economy, right? Next week we have core inflation data coming out, and my boy David here. What's up, David? I appreciate that. Answer me one question. Why don't you have any stocks? Do me that favor. Why don't you have any stocks? Let me know. And if you guys are here, I'd really appreciate it if you liked and shared the live stream. It's really going to help me out. But I mean, yeah, guys, this is absolutely insane. Now, what I'm going to do now is I'm going to pull up SVB, Silicon Valley Bank News. Okay. So basically and yeah, I mean, look at this. Here we go. We're looking at CNN right now. Let me just go ahead and pull this up on this screen. And let's go ahead and transition to it. So now what we're looking at here is we're looking at the story from CNN. And as you guys can see, Silicon Valley Bank has collapsed after failing to raise capital. Okay, so that is definitely not good for the economy. I believe the news is out already. Obviously, it's out, right? I mean, there's no hope for this economy. I've been saying this since like 2021. If you go look at some of my old videos, I've been saying that a black swan event of some sort was going to come. If you look at the S&P 500 over the course of time, and you look back at 2008, right? Oh, whoop, I'm still on that same. Let me remove that really quick. My fault. But if you look back at 2008, okay, which was the Great Recession, right? We're going to go back. We're going to go back. And I'm going to zoom this chart all the way out because these are all daily candles. Let's just go to a monthly. How about that? And again, each one of these candles represents a month. This was 07. We got everything here in 08 all the way down to 09, and then we have this huge bounce, like 12-year, 13-year uptrend, right? That is not healthy. We had a pullback down here, but that was caused by COVID. That was the COVID pullback. If you see, that's April 20th, right? This is December 2019. That's when we started crashing here. These were not sufficient pullbacks in the market. So now the market's got to find its equilibrium. So it's had this huge run up, right? I mean, these were our previous trends right here. These were our previous tops, okay? There's no way that this is sustainable, right? We've had massive growth in the economy. There's no way. I would assume that we come down to around here, $287, which is unfortunate. And if you watched the live stream the other day, Senator Kennedy was grilling Jerome Powell from the the Federal Reserve saying, hey, you are trying to put people out of work. The only way you can tame inflation is, for one, you have to raise interest rates, right? It means you have to slow down spending, make everything so expensive that people don't want to spend their money, right? They're just like, ugh. And you're probably feeling it. You're seeing groceries are much higher, gas is higher, everything. All costs of goods are much higher than what they used to be, right? Now, the crazy thing is that he said in his testimony that they're trying to achieve disinflation, and basically Kennedy put it, hey, you're trying to achieve disinflation. Now, based on, previous trends, disinflation means prices don't go down, they just don't go up as fast. He said, so you're telling me that's what you're trying to accomplish here? He said, yes, 100% yes. So meaning, just because prices may have stabilized now, there's no way that inflation is coming down anytime soon. Meaning, if you think it's bad now, you don't know how bad it's going to get, because it's going to get fucking worse, okay? Meaning prices are going to take, it's going to be like a stair stepper. So think about going up five flights of stairs. Like, you're taking time, right? It's just going to take you some time to get up to those 5 flights, right? That's basically how inflation is going to be. Now, they tried to do some things that were going to bring inflation down, but I mean, they haven't succeeded, right? So they brought it down slightly, right? To make everybody feel like, oh, everything's good. Like we're going back up, right? So anybody who's an investor in the market got caught off sides, right? Inflation's back on the rise. We also have the debt limit that is coming up, right? If the U.S. were to default on its debt, it would cause a catastrophic event, 100%. We are talking not only with a recession that is looming, right? We are looking at dark days ahead, 100%. And it's sad, because with every percentage point of unemployment that there is, 40,000 people die, right? And so I do believe Senator Kennedy was talking about that in order to achieve the 2% inflation goal that the Federal Reserve has, he says possibly 10.6% of unemployment is what would need to be achieved in order to reach that 2% goal, right? Now, if we're talking, percentages, every percentage point, mind you, is 40,000 people dying. Times that by 10. I mean, it's extremely sad. You're looking at 400,000 people, right? Because financial institutions are greedy. The government is greedy. Corporations, the big corporations, they are absolutely greedy, right? If you think about 2020, some of the tech stocks, Amazon grew by $3 billion or something like that, 3 trillion. It was some absurd amount, right? And they did it because everybody was forced to stay home. Nobody wanted to go out. So what were you doing? You were buying Amazon packages because it was the easiest thing to do. I don't want to go out and get COVID, right? I don't want to get my nose swabbed. So this is the start. We're looking at the start 100% of the market crash. And this you're looking at some candles. This is based on a monthly candle. We're 100%, by the end of this month, we're going to have absorbed this whole thing. It's probably going to take out all of these little areas, and it really just depends, to be honest. But I don't see any scenario in which anything good comes out of this, right? We've already broken this level. To me, this was like a pretty solid level. Now we're just kind of testing here. We could possibly end here at the end of the day at 378 on the S&P 500. So David, you said been spending on real estate and life insurance. Am I young? Yeah. Gonna have to take some of your knowledge soon though and buy. Yeah, so the one thing I recommend doing, now again, I'm not a financial advisor. I have a master's in business. That's about it, right? but you don't have to be a rocket scientist to know that the economy is in a really crappy place, right? In my opinion, when events like this happen, if you're paying attention, like David is saying, buying real estate, those are good investment vehicles that if you're able to catch them at the bottom, 100%, I recommend that that's a possibility, right? If you're able to do that, if you have high, I would say high credit cards, right? And not high credit cards, like what am I trying to say? Like high balances. Damn it. High available credit. That's what I'm going for. Sorry, I don't know why I'm losing that. But if you have large amounts of credit available to you, on your credit cards, let's say like $25,000, you can always leverage that, right? Leverage that as a down payment towards the initial mortgage, right? And if you're a first-time home buyer, I always recommend going for a fourplex, right? The reason why you do a fourplex instead of a single family home, you do the fourplex so that way you can house hack it. You rent the other 3 units out. You include the you include the cost of the rehab to make the value of the property go up, right? Obviously, you include that into the loan. Well, I want to do the remodels for these other units in my own, make it to where it's desirable for people to want to rent. Sit in it for a year, move out after a year, then guess what? Now it's like you have 4 properties all in one, because then now you can rent out all 4 of those properties and you can capitalize and get some free cash flow. And then because you did the rehab, you're able to grow the property's value. You can always do a cash out refinance and go put that money into another property, right? And then you have people paying down your mortgage on that property. It sounds hard. Well, you think it's harder than it really is, right? And some people may be facing credit issues. There's ways around that. You can literally get, there's ways, and I'll discuss this in some videos, but there's ways to buy property without needing a credit score. You don't need a credit score to buy a house, right? I'll get into that into some videos, but just throwing that out there, right? A lot of people, they're just like, well, I'm not ready to buy. My credit is bad. I need to fix that first. So you don't really need it, to be honest, right? And if you're somebody who just doesn't have the liquid cash for a deposit, but you do have great credit and you have high credit cards, right? So like high availability on your credit cards. So like, for instance, I could call up American Express right now, my platinum card, say, hey, look, like I'm going to make a large purchase and, it's going to be about $15,000 to $20,000. Okay. As long as they know, they don't think it's fraud, right? Then I can just be like, there you go. Boom. Let me slap this down. There's my down payment on this property. And then you're leveraging your credit to your advantage. And then as you start getting those payments in, within 30 days, you could have all of those units done and rented out within 30 days, right? These are great buying opportunities. When events like this happen, these are absolutely amazing buying opportunities to help yourself generate some type of wealth. And as I've been talking, we have dropped further, okay? Here we go. And yeah, so we have dropped further, a whole, $2, $3, by the end of the day, we could be here. And, like I said, I'm profiting off of this downside, but this is an absolutely strong candle telling me that people are jumping ship. And, this is, I can't imagine. Now, one crazy thing, this is a crazy stat. So yesterday, the top 4 banks, right, have lost about, I want to say, top 4 banks lost 52 billion, right? They lost 52 billion and in value yesterday, and that was just from the fall yesterday. Right. So if you imagine they lost 52 billion yesterday, we had I want to say it was about, Yesterday was about a 1%, 2% down day. We're having the same exact thing now, another almost 2% down day. So a little over 100 billion in value in terms of banks has been lost, right? This also comes at a time when the Fed chair is talking about how they are going to have more liquidity requirements for banks. So this is interesting, guys. Let's see what they're talking about here. So give me 1 second. Okay, so we're looking at Business Insider. Goodness, this is scary. I'm not even gonna lie, you guys. Yeah. Okay, so now we're transitioning over. David, thank you, brother. I appreciate you showing up, my man. So, as you guys can see, Wall Street's top 4 banks just had 55 billion wiped off of their market value in a single day. Okay? So, it's likely US Bank, it's likely JP Morgan Chase, Bank of America, right? And I'm not sure if you guys seen some videos. I've seen some videos out there where Bank of America is not even cashing people's checks, like I'm talking like blue collar workers, right? Like, or they're not allowing them to make withdrawals. So, I mean, yeah. So this is going to be an interesting situation that comes out of this. We're definitely looking at dark times coming ahead. I really think that it's in your best interest to do what you can to prepare for this, because as I stated earlier, they're trying to achieve disinflation, and disinflation is it's a tricky term, right? So it's a deceiving term in general. So when someone says disinflation, you're thinking, oh, inflation's going to go down. And, as I said earlier, that's absolutely the opposite. So disinflation just means that prices go up. They just don't go up as fast. So, I mean, I would say full-blown recession is here. And you can quote me on this, because I've been saying this shit since 2020, that some type of event was going to bring us down significantly. But I would say full-blown recession would be here by the summer, which is pretty similar to how the recession kind of worked out in 2008. I can remember being in college and, I'm looking at $5 gas prices, and I'm just like, oh man, that's ridiculous. I vividly remember that because it was a hot summer that year. I 100% remember that summer. It was not nice, right? And yeah, this is crazy. So this market is on its way out. I mean, we're looking at Apple. Apple's starting to fall. We're looking at goodness, yep. I mean, Microsoft, Tesla, they're all red. One thing as well is if you're interested in trading or anything of that nature, I actually took some 383 puts today, and as you guys see, it's at 384, so I'm almost at my number. But I took them for next Tuesday because next Tuesday is the CPI report. The importance of CPI is just telling you, like, hey, what is inflation doing from last month? And, last month's CPI, and let's just go ahead and show how the S&P 500 just caught a small bounce, but that's very insignificant in the grander scheme of things. Like I said, I think we can go down here today, and only reason is because we got to fight through all of this support right here. And if you don't know what support is, I mean, it's all these candles, right? We've had this basing kind of all these candles just ranging in this area. So we could either get a bounce, come back and retest this top of, you know, of this green zone, or this bottom of this green zone. But to me, it doesn't look strong enough. And what I'd be looking for here is, let me find my box. There we go. I'd be looking somewhere around here where this candle is. And so that's basically where the line is. So, whoops. So we're either going to hit the top of that or we're going to hit the bottom of it. And that's the zone I'd be looking for. That's my next level, at least, or significant level, right? And we break below that. I mean, you got to, so anytime you're looking at a chart, you always want to look left, right? So look at the previous history, right? So we do have a little bit of support like right here. So that's why it's kind of just sticking around, right? And then we're going to run into some of these candles right here. Support is fine. But, I mean, yeah, just with all the news that's dropped today, I mean, there's no way this thing is looking any brighter tomorrow, Sunday, Monday, Tuesday, right? My options contracts are almost in the money. I had a 383 option. If we come down to 381, I doubt by Monday, and I'm going to hold over the weekend. I don't care. I mean, I think they were $50 a contract. They're probably now like 600, right? So, and that's just because I have time on my side, right? This is crazy. And I think that, you know, we're looking at to be honest, we could be looking at a global event. And again, it's just going back. We've been on a 12, 13 year bull market. There's no way. The only pullback we've had, and it was a blip. It was a blip on the chart, was COVID. COVID caused it because everybody thought the world was ending, all this stuff, right? They were out buying tampons and toilet paper, right? So, yeah, it's crazy. I just, it's baffling. And let's just go back to, give me 1 second. We're going to find it. I'm actually just going to go ahead and play a little piece of what I posted the other day. Okay. If you guys don't mind, just bear with me. I just need to find it really fast. But yeah, so I'm anticipating this to at least come down to here and maybe get a little bounce, right? And then, crazy enough, is let me go back to what I had some screenshots here, and let's see. No, not that one. No. Yeah, here we go. All right, let's see what this one looks like. So this is what I had right here, okay? If you guys can see that. Nope, you can't. Not a worry, though. Oh, yeah, you can. Okay, sorry. So let me go ahead and make this larger, right? I did this on February 27th, right? Obviously, that's about 13 days ago, okay? But this was the chart I had. It didn't go as high as 409, 410, but I had readjusted my chart to hit the top of this area here, right? Some of my lines. And as you can see, those lines have stayed there, right? Those are the lines from February 27th. They've been there. The only other difference is I added my zones, my box zones. And that's pretty much what I had. We got up to 408. Sometimes you have to readjust because this was just an initial kind of, belief that would happen. And let's take a look at this chart. What happened? We did this, boom, came down here, bounced all the way up to here, which my zone was like slightly above that. So like right around here, okay, 410. And now we're heading down, right? What's Tuesday? Tuesday is inflation report. Today we had a higher jobs report, meaning that we still have a really hot jobs market. So again, the only other way to tame inflation is to raise interest rates or to cut jobs. But because we have a hot job market right now, which, I mean, if you're unemployed, you're probably not thinking so, right? But because people are still getting hired, that means the economy's still growing. That's not taming inflation, right? So that's still overstimulating the economy. And the mistake they made was they put out 75% of money. They started printing 75% of money in 2020. That's all the money that's in circulation. So what do? You have to start taking some of that money out of the economy. And, they're trying to do, the best they can. But in my opinion, they know exactly what they're doing. This has been, to me, it's like kind of like a plan. Like, oh, hey, when are we going to go ahead and crash this thing? Oh, well, let's just do it on, March 23rd. Let's do it March 23rd or like June 2nd. One of those. How about that? Yeah, sure. Let's set a date for it. I mean, it's absolutely insane. But what I'm going to do now is I'm going to go ahead and pop up the previous live that I did and, kind of show you guys what I was talking about. So just give me 1 second. And I'm going to go ahead and transition this really fast. And we're going to make this louder. And this is Senator Kennedy that I was telling you about.
Based on history, an immutable fact, unemployment would have to go to 10.6%.
10.6% for unemployment. Can you? So I'm going to rewind it one more time so you can get the full context testimony that he gave yesterday, which is what we're reviewing right now. Okay. The new one starts probably in about 45 minutes. The market's about to open in about 15 minutes. So we'll go over some charts. I'll kind of show you guys some supply demand zones. I trade options. I don't claim to be.
We got inflation down, disinflation since
Here we go.
the 1950s. In order to reduce inflation by 2%, unemployment had to go up 3.6%. Now that's history, is it not?
I don't have the numbers in front of me, but yes, the standard has been that there have been recessions and downturns when the Fed has tried to reduce inflation.
Now, right now, the current inflation rate is 6.4%, and the current unemployment rate is 3.4%. Now, if history is right, I'm not asking you to again blame anybody, but if history is right, unless you get some help, in order to get inflation down from 6.4% to, let's say, 4.4%, and the unemployment rate is going to have to rise to 7% based on history.
And remember, for every point of unemployment, 40,000 people die.
2.2% based on history, an immutable fact, unemployment would have to go to 10.6%.
10.6% for unemployment. Can you believe that?
That's what the record shows.
That is,
the history shows.
It's mind-boggling.
I don't think that kind of a number is at all in play here.
I know you're reluctant to admit it, and you don't want to get in the middle of a policy dispute. But I think it's undeniable. It's undeniable that the only way we're going to get this sticky inflation down is to attack it on the monetary side, which you're doing, and on the fiscal side, which means Congress has got to reduce the rate of growth of spending and reduce the rate of growth of debt accumulation. Now, I get that you don't want to get in the middle.
Reduce the rate of growth, but we still have a hot job market.
On the fiscal side, the fewer people you're going to have to put out of work. Isn't that a fact?
Dial pad has
All right, guys. And so let's go back to the chart. We have had a small little bounce. It's not much. It's about a $2 bounce. But, overall, it's still just a very dark outlook in terms of how the economy is shaping up. You see, I really love these lines because they are pretty accurate. You see how we had this rejection right here, right at this line. And remember, those lines have been there since February 27th, right? When I initially drew my zones, that's whenever I had decided to go ahead and start making some moves, right? we had a small bounce here, but it was because of all of this support. Remember, I did say that, you know, some of this previous support could be an issue, but again, the likelihood of that sticking as support is unlikely with the way the news is shaping out right now, with the banks starting to go under. It's pretty scary right now, to be honest. I can't see a scenario where anything good happens within the next couple of months. I think your PCE numbers are going to be important. Also, the CPI numbers are going to be important. And then jobs. If jobs keep coming in hot, we can almost expect more of a crash. And that's just because you're not taking money out of the economy. You have to take money out of the economy. You have to pretty much put people in really bad situations, right? And that's exactly what Kennedy was talking about when he was, when he was explaining, like, hey, we have to stop the rate of growth in GDP, overall GDP, meaning the gross domestic product of the country has to slow down. So the economy itself has to stop growing, has to start slowing down. So, like I said, the only way to do that, raise interest rates, make things more expensive, right? Used cars, homes, cost of goods like groceries, everything, right? Cost of living has gone up. Used car prices have gone up. We've already started to see delinquencies there. Now you're starting to see banks fall. And it's almost like a replay of 2008 because I believe SVB was heavy in some, in some mortgage-backed securities, just like 2008. It's crazy how history just continues to repeat itself, right? And it's like you would think some of these people would learn their lesson. However, you can't get in the way of greed of what, a lot of the banks, let's face it, they're privately owned, right? They're not regulated by much, right? If it's an investment bank that's all SEC regulated, however, SEC is about as hard on the banks as like a pre-K teacher, right? It's like, slap on the wrist or go to timeout for a second, then just resume doing what you did yesterday. It's whatever. It's crazy. Let's see. How long have I been on? Give me 1 second. And if you guys are here, I'd appreciate if you guys could give the video a like and drop a comment in the chat. Share it out. Really appreciate it. One thing that is going to be cool as well is if you see some of my old videos, right? So I've changed the name of the channel. I've changed the name, obviously, what you're seeing now, the channel used to be called Flashpoint Capital. It kind of turned into like credit and credit card rewards, things like that. I do kind of want to reintroduce that. And what we used to do is myself and another creator, we used to do kind of a thing called the Flash and Tech Show. And I think we're going to bring that back. And it'll probably just be 1 or 2 live streams a week. The content that I'll be releasing here shortly will be more geared towards, financial news, financial markets, ways to hedge and ways to identify opportunities. So that way, you're not sitting in a bad situation, or at least trying to, put yourself ahead for retirement, things of that nature. So, yeah. Let's see what's going on here. So I've been on for about 45 minutes. I also am going to get into some crypto as well. Not right now, but if anybody has any questions or anything, please feel free to put it in the chat. And let's see what happens here. we're going to find some. There was one more thing I wanted to show up with. All right, let's see what it is. Huh. All right, so I'm here on the Market Watch. Yeah, I mean, we're looking at bank ETFs falling amid concerns over SVB and crack in financial system after rate hikes. So that's the other thing too. So when the FOMC happens again, which is the Fed meeting, they're gonna say what their plans are, and a lot of that depends on what the CPI inflation comes out to, and let's just see what was last month's. Let's see, CPI month by month. I believe it was 6.4. 6.4. Is that the same? Yeah, okay. So here we go. I'm going to go ahead and post this right now. Give me 1 second. So what we're looking at here is this number down here. So month by month, I'll go by it. So in January 2022, inflation was at 8.2%. Okay. Then it went up to 8.6, 9.4 in March, April, 8.9, 9.3 in May, 9.8 in June. I mean, that hasn't been seen since 2008. And what happened there? Well, since 2007. And then what happened? We had a pretty big recession, right? Also, if you look at bonds, short-term bonds are going up. And that only happens typically when it's followed by inflation. You look at the yield curve. The yield curve is going up. It's inverted, right? When it inverts, it's a bad thing. Okay? Yeah. I mean, this is just, it's been crazy. Another thing to look at too is if you're in crypto is you look at Bitcoin. What is Bitcoin doing? Let's see what Bitcoin is doing. Funny how it's doing the same thing, right? Bitcoin's going to like here, 17,000 pretty soon. Once inflation comes out, and people don't like to think that crypto is kind of based on what the economy is doing, but it is, to be honest. Banks have gotten in on this because it's a highly unregulated market, and they put their algorithms, their high frequency trading algorithms, right on this thing, and now it tracks with. I mean, all you have to do is look at Bitcoin, and you can kind of figure out what the market's going to do the next day. It's almost heavily tied to what the market is doing. Another way to find out how the market could shape up the next day would be looking at ES. That is the S&P 500 futures. And as you guys can see, I had similar zones here, right? Similar zones. And now it's falling. And then look, I even had these zones here, 387 or 3871. Sorry, this is the S&P 500 futures again. I had these zones here already, right? So as you guys can see here, and just to kind of make something clear, On ES, typically, if you're trying to calculate like what the difference is between ES, SPX, and how the futures are shaping up and things like that, they usually are about $2 to $4 difference in price. So if it's at 3,900 on ES, you're probably looking at 386 or 3860 on SPX, right? SPX is the index. SPY is the ETF, right? So the exchange traded fund for SPX. But these are buying opportunities. Apple's going to go down. Apple's going to go downhill. See, I got some levels here, but we also have this gap that should get filled at some point. Does it get filled today? Who knows? Doesn't have to. But I knew Apple was going to come down significantly. And, there's still hour and a half, a little over an hour and a half in the trading day. So, I mean, it's pretty crazy. And, I just realized that I didn't even have my chart pulled up, but I still had the inflation data up over here. And, these are my zones that I was talking about. I have these zones already kind of pulled up on my ES chart. These are the futures. And, if you're looking at SPY, it's the exact same thing, right? Exact same thing. So I just kind of did the exact same thing. It's just on SPY, right? So I like to trade SPY options and SPX options. I like SPX options better because better tax benefits. You can also use, it's smaller risk with a higher reward, right? So it's still same kind of risk reward percentage, like a 70-30, but for the most part, like if you're putting $50 into SPX, you could possibly make $1,000, right, off of a trade. If you're putting the same 50 into SPY, moves a little slower. So those contracts are not going to go up to $1,000. Might go up to, 300, 400. It's all relative, but hey, as long as you end green, to me, that's better than nothing, right? The tax benefits for SPX as well are that 60% of your earnings from SPX, so let's say you make $100,000, right? Just trading SPX the entire year. 60% of that is going to be taxed as long-term capital gains. So that's about 15%. So $60,000 of that out of that 100 is going to be taxed at 15% only. And then the remaining 40% will be taxed as short-term capital gains, which is around 35 to 40. It just depends. So instead of taking the full 35 to 40% hit and only keeping 65 to 60% of your money, you're actually able to keep with a higher percentage, somewhere around, you'll likely altogether, if you're trading SPX, you'll only pay about 20% of those taxes. So instead of only keeping 60 to 65, you're keeping around 80. So that's 100. Like, to me, that's a way better decision. Sometimes though, I like just trading SPY, and I'll use it to like test out certain, ideas. Like, like I said, if you looked at my last live stream that I did on Wednesday, when I talked about the testimony that Fed Chair Powell gave, I was saying that we could come back up here, test this 400, which is what we did right here, and then fall back to this 391, 393 area. And what happened? We went back up, we tested this 400, 401, came back all the way down to this 390, 391 area the very next day. Yeah, I mean, I 100% believe that we're going to be hitting a crisis soon of some sort. And, yeah, I mean, with banks going under at some point, I feel like one of the big boys is going to fall. Who knows? Could it be Bank of America? I mean, Bank of America is, to me, it's one of the worst banks, but, they're Merrill Lynch kind of, they're under the umbrella. Merrill Lynch is under their umbrella, or vice versa. I can't remember. But yeah, I mean, one of the big boys is coming down. They have to. They have liquidity requirements that are going to be coming into place. One thing I'm going to get into is I wonder if they're crashing this market so that way they can introduce and get rid of the dollar. And we have what's called CBDC, a centralized bank digital currency. Now, wouldn't that be something, right? So, as you guys know, that we no longer, operate under the gold standard. So our money's not backed by anything. It's like fake money, basically, right? So what is stopping them from crashing this market at some point? Switching out the dollar for this CBDC and just keeping track of everybody's money that way. To me, it's scary, but yeah. I believe China does something like that, where they have like a social credit system. You guys get a parking ticket, you're just like, I'm never going to be in this city again. They're not going to find it. No, they're going to find it. They're going to give you a ticket and take it automatically out of your bank with that CBDC. It's like, here, thank you. Say something stupid, they're going to charge you $10 for it. Boom. So you can no longer have any freedom of speech. I mean, that's all conspiracy anyways, and I'm not too into all that, but, second day of testimony, I did hear some talks of a centralized bank digital currency, being spoken about. And, so that's going to come out, that video will come out soon. And, it's interesting that these conversations take place and people aren't paying attention, right? So it's just a bit concerning that people are oblivious and, you get distracted. Yeah, of course, everybody. Kanye's crazy. Amber Heard slapped Johnny Depp. We got aliens now coming out all over the place. It's crazy. So a lot of these things are just distractions. And I truly believe some of these distractions just get pumped out by the media, so that way we can kind of turn a blind eye to what's going on in the financial sector, and we're just kind of left wondering like, oh, what's going on? Why is my money not lasting me as long, right? Why is it taking me $60 to fill up my tank when it used to take me $30, right? Or why is it taking me $200 when it used to take me $100 to fill up my truck? Things like that, right? But anyways, guys, I would appreciate it if you guys like the video. I am going to get out of here, and I am going to say peace out. Have a good weekend. Be safe. Don't do anything dumb. Yeah. But I appreciate you guys for stopping by. Share this video. Share the channel. It's really going to help me out. I will be putting out content here pretty soon. I'm just getting everything kind of fine-tuned, more so on my software editing as well. But, I'm going to be doing some collaborating with some other creators that I used to create with. And, hopefully you guys will enjoy the content. And, again, if you can just give the video a like and share it out, I'd really appreciate it. And if you want to use this charting service and you want to get, $30 off on your subscription, just click the link down below. It's going to help out the channel as well. But you'll get $30 off your subscription.